Hi everyone, we have prepared latest market updates for August 17th, 2022. Carlsberg shows weak sales due to rising costs. Danish brewer Carlsberg on Wednesday reported second quarter earnings below expectations as earnings were hit by higher raw material and energy prices despite a rebound in bar and restaurant sales. Global uncertainty remains high, the CEO said, and growing pressure on input costs will be a particular challenge for us in the coming quarters. Carlsberg, which also makes brands such as Kronenbourg, 1664, Tuborg, and Somersby, maintained its full-year forecast after raising its organic profit forecast earlier this month to high-digit growth. The world's third-largest beer maker reported sales of 20.51 billion Danish kroner, $2.81 billion for the quarter, below the 21.6 billion projected by analysts in a company survey. Despite this, Carlsberg's shares traded up 1.85% on Wednesday. Rival Heineken said this month that consumers bought more beer in the first half of the year despite cost of living pressures, but expects rising costs to reduce profits next year. Ethereum jumps to the cusp of merge update. It looks like mega modernization of Ethereum is going to happen. After years of delays, the merge seems almost certain to happen in September, and the cryptography underlying the blockchain will undergo a radical shift toward a system in which the creation of new Ether tokens will become much less energy intensive. Investors seem to agree as Ether is outperforming its big brother Bitcoin. Ethereum has been on the rise for 6 straight weeks, rising from a 1.5-year low of $880 in mid-June to a level approaching $2,000. Bitcoin has paled in comparison, rising 37% from its June low to $24,116. Ether is chewing away at Bitcoin's cryptocurrency share. It now accounts for nearly a fifth, 19.7%, compared to less than 14.9% 2 months ago. Bitcoin's share has dropped to 40.2% from 44.9% in the same period. If Ethereum's creators succeed, as is largely expected, it could be a game changer for blockchain, making it cheaper to mine and easier to implement in fintech and other cryptocurrency applications. Of course, little can be guaranteed about the elusive transition, which has already been postponed several times. Large U.S. companies stockpile oil, deals prevail. U.S. oil inventories owned by the top 50 companies rose 13% in the 5 years ended in December, according to an Ernst & Young report released Wednesday, with mergers and acquisitions a major contributor to the increase. Oil reserve estimates, which signal the direction of crude oil production, rose to 31.8 billion barrels late last year after falling sharply in 2020 as the COVID-19 pandemic forced energy companies to reduce activity. However, U.S. inventories are still below the 2019 level of 32.5 billion barrels. The increase in reserves last year was mainly due to large independent oil and gas companies buying private energy firms and acquiring other reserves. The group of companies under study spent $49 billion on acquisitions. Analysts say trading oil at around $90 a barrel is likely to spur interest in new production, but pressure to cut costs, return capital to investors, and address climate concerns will cast doubt on any big push for growth. Also, companies may reallocate funds to U.S. oil operations after Russia's invasion of Ukraine, which caused Exxon and others to abandon operations in Russia.